The production of this program is made possible thanks to the support of the following and viewers like you. The rental vacancy rate in Greater Vancouver and the Fraser Valley is tight, less than 1% year over year. That on its own puts pressure on the market, driving up rental rates, says Kerri Jackson of Concert Properties. Building new supply is a long and challenging process in a remarkably complex municipal landscape made up of 21 different jurisdictions at a minimum. Add in factors such as decades-long shift away from purpose-built rental in favor of condo developments that once sold to investors did become rental properties. Beau Jarvis of Wesgroup says recently purpose-built rental housing has resurfaced as a way of easing the tight supply. He adds, it's a good idea, but one that developers are hard-pressed to immediately jump on side, and that means that there is not the same uptake from developers as one might have hoped for. As of October 2024, there are minimal purpose-built rental properties in operation throughout the Metro Vancouver and Fraser Valley region. Those properties are a step in the right direction. However, they do not come close to the volume of new projects that are required to meet demand. I invited Kerri Jackson of Concert Properties and Beau Jarvis of Wesgroup to join me for a conversation that matters about the value of purpose-built and why it's a risky business. Welcome.
Thank you.
Thank you.
It is a risky business, isn't it?
Absolutely.
What, off the top, for somebody who goes, oh, come on, you've got land, you're investing money, you've got decades of ownership. What makes it so risky?
Well, from a property management standpoint, you're carrying suites, you're carrying the maintenance of the building, and here in BC, you're restricted on what you can increase those rents on an annual basis. And unfortunately, a lot of the costs are much higher than what those annual increases are. And you're also relying on turnover to be able to increase rents back to market once they fall behind.
And that's just scratching the surface.
Absolutely.
Because it starts much earlier than that, doesn't it? From the moment that you start to purchase the property and determine what it is that you want to do with it, you then face a series of hurdles and challenges that make me, as an outsider, wonder why people even do it.
I like to delineate purpose-built rental into two sort of environments. One is getting it built and going through that process until it's up and operational, and that's a policy framework in itself, and then putting it into the next policy framework, which is operational. So it's now built, it's operating, and now all of a sudden that's kind of subject to a new policy framework. And that's what Kerri was just referring to. On the getting it built side, starting from underwriting a piece of land or having a piece of land and deciding to move forward and build purpose-built rental, it's an extremely challenging process. It's extremely risky once you get shovels in the ground. They are challenging to finance, and they require a lot of upfront equity and capital. And that's something that I think a lot of the general public, policymakers, politicians kind of forget about. It's like, well, just build rental, but they forget about the capital that's required to start it. They are way less capital efficient than building a condominium project that you take to market and pre-sell to obtain your financing, and then you go build it.
The production of this program is made possible thanks to the support of the following and viewers like you. For somebody who doesn't know, maybe explain that just a little bit, why it's so much more challenging when you're going into the purpose-built rental market.
Yeah, so condos, we launch a project and we try and pre-sale and meet a pre-sale test with the bank. The bank issues construction financing, and typically that requires less capital up front, and it's a little bit more efficient. Rental, on the other hand, you have to come up with a lot more capital up front before you can even start the project and qualify with the bank to get construction financing. You find yourselves often taking advantage of programs that government have to offer, CMHC and BC Housing. There are some really great programs actually that have helped to contribute to a little bit of a resurgence in supply of purpose-built rental, in particular CMHC and the RCFI program. So that's helping ease the burden of that upfront capital and their lower interest rate loans. And so there's programs on that side.
I think, though, if I can add, with that, when you're talking about planning and, building out your pro forma, you're also kind of estimating what is the market going to be in the 3, the 5, the 7 year, however long it takes to kind of get that building to operations. And I think in BC, we've been pretty fortunate that the market has been pretty consistent. But, today we're seeing a downturn in the market. And so any projects that are launching, over the last 6 months or into the next 6 months are potentially not at rates that they had built into their pro forma. And so they're actually coming out already behind and already losing money.
Yeah, and so you're seeing actually a capital call at the end of the project as well, because their financing, the underwriting of their financing and what they anticipated they would take out as a takeout loan at the end of the project. So you finish your construction loan, you stabilize the asset, and you go for term financing, just like a mortgage on a house. And the numbers, as Kerri just mentioned, are not what you performed at the beginning of the project, and so you're needing to find more capital right at the end, and so it's becoming quite challenging.
And are you finding that capital difficult to attract right now?
Yes, yes. I mean, I think our two organizations, we operate a little bit differently, but we're larger corporations that probably can absorb some of that. But that capital scarcity is one of the main issues with developing housing right now.
Is purpose-built rental a good idea? We touch on it that, you're going to put more units onto the market, but is it a good idea?
I mean, I think just fundamentally, absolutely. It's not going to bring you maybe some huge returns on an annual basis, but over the long-term value of the asset, it's steady income. I think, generally speaking, there's always a need for rental. People either choosing to rent or out of necessity. So I do think that there's absolutely a market for rental and for purpose-built rental that provides people with stability in the rental process.
But that has to be pretty patient capital.
Extremely patient. Yeah.
Yes, for sure.
I agree. I mean, I think that purpose-built rentals are a really important part of the housing continuum. It is considered on the affordable part of the continuum, and it really creates stable housing. But you have to have a high tolerance for risk. It is lower returns, and you got to be thinking long term, because it's a bit of it can be a risky asset.
There's only so many organizations that have the financial heft to be able to step into this market. So how many can you support in, let's say, the development period of 5 to 7 years, like for your own company? And if you then reach your limit because you're not recognizing the asset value and the cash flow that you need to be able to then go into the next one, what do we do then?
That's a great question, and I would say we're kind of experiencing that right now. We are we're one of the largest development companies in Western Canada. I would argue Concert's perhaps one of the largest in Canada. We have limits for sure in terms of what we're able to deliver. And we're getting close to maxing out those limits in terms of both capital as well as capability, borrowing limits from lenders, and that we only borrow from Schedule A banks in Canada, and we have pretty high limits, but there are limits, and so we look at if you break it down from CMHC's sort of, I guess, suggested numbers in terms of returning to some level of affordability in Canada, they suggest 3.5 million homes by 2031. And that's to return to sort of 2004, 2005 levels of affordability. It's virtually impossible in a stable market with stable interest rates, stable construction costs, stable rental rates, everything kind of stable. We build about 250, 270,000 homes a year. And so we won't even meet half of that in full stability. And so we're one of the largest in Western Canada. We probably build 1% of housing in the country.
Yeah.
And so we're very fragmented, and we all make these little impacts. And when capital is scarce and the risk is higher than the reward, people start to divert capital and efforts and capabilities to different, businesses.
The production of this program is made possible thanks to the support of the following and viewers like you. The rental market is one that is probably never going to go in search of people to rent their units, though, are they? And we hear so much in the media about low-cost rental housing, but is that really the market that we should be focusing on?
Yeah, I mean, listening to some of the experts who do a lot of research and really look into kind of the demographics of renters, generally speaking, if you can build the new rental and you've got people who are sitting in a current rental suite, and the gap between what they're currently paying and what that new, maybe more luxury apartment offers, you'll move those people into that luxury apartment, thus freeing up the older suite that's at a more affordable price. The problem is there was such a lag or such a dry spell when nothing was being built. People stayed in their homes for a long time, and so now even people who can afford more don't want to afford $1,000 or $1,500 more a month. They've become accustomed to paying a certain amount, and so there's no incentive for them to move. And so they're actually taking up what would be considered affordable space. And so I think, what the government's trying to do is have developers build these affordable units. And I don't have a problem with that. The problem is, in order to make the financial piece work, all it does is raise the rent for those units that aren't considered affordable. So you have really expensive units coming on the market in order to subsidize the more affordable units.
So how does that work within a building? They go, okay, well, 10% of the building has to be affordable. How does it become affordable? It's the same building.
They're just, so typically it's with, we call this, there's things called inclusionary zoning practices or policies, where we negotiate with a city, if we would like to build this building here, and they say, okay, in order for us to allow that entitlement to occur, you have to deliver 10% or 15% or 20% of the units at our definition of affordability within this municipality or by CMHC's definition. And what we typically do with the cities is we sort of find that point where there's enough, I guess, density of market units to cover and subsidize the cost of the non-market units. And then those units typically, and this is what you asked, is they usually have a housing covenant attached that guides the owner-operator as to how those units are operated, in particular with respect to the rent that can be charged. And those covenants typically have a right for the local government or whomever, CMHC, if you have a CMHC loan, to audit those units and ensure that the people that are occupying those units are meeting those rent sort of thresholds, if you will.
Meaning that they have to be at a certain income threshold themselves. Like they can't be above that to be able to qualify for that unit.
Some are tested by income. Some are, Vancouver, for example, has they set rates for these types of units on their own, and they look at them on an annual basis, or are they raised by an annual basis, or perhaps by inflation. So there's a number of different models out there. You're seeing, so we really refer to this as inclusionary zoning policy. You're seeing a lot of it fail, frankly.
How come?
The numbers aren't making sense. And I think in the beginning, we were all sort of dazzled by the density. We're dazzled by the extra units and the height and all that kind of stuff. But then when you really get into it and you start underwriting these buildings, there's this component of the building that's in some cases significant. And the rents are only moving by they start low, and they're only moving up by a tiny little bit along the way, but your costs are kind of moving along unchecked. There's no cap on your costs, your insurance, your property taxes, your maintenance, your utilities, all this kind of stuff. And you look on sort of a chart and you look at time and say in year 13 or in year 15, the costs surpass the revenue.
Right.
And you don't have very much turnover, and even when you do have turnover, they're still capped at those agreed upon, income limits or rents set by the city. And so a lot of people are starting to walk away from that, challenging to finance, and there's some risk there. You have sort of it's like having an illness and you're terminal at year 15, and so you're seeing a lot of people sort of walking away.
Well, and I think in some cases, the programs had varying scales of how long you'd need to provide that affordability. But again, those continue to get increased. And so, in some cases, it's a minimum of 40 years. So, well past the time that I'll be working. But like you said, if year 15 is really your point where you're upside down, and now you've got to add another 25 years of continuous kind of difference between that revenue and the expenses.
The production of this program is made possible thanks to the support of the following and viewers like you. Are there programs, though, that the government is stepping up with that can help to maybe improve that pro forma, like their GST initiative just recently? Is there benefit there?
I mean, I know a project we completed last year in Coquitlam. We had worked with the province and with BC Housing, and so there was some financing that came through that. And again, I think it'll be interesting to see how it plays out. 1/3 of the building in this case is through the BC Housing program at 3 different levels of affordability.
So the tax relief here doesn't apply to the entire building.
No.
Even though the whole building is purpose-built.
Certainly.
Rental purpose-built.
Certainly.
The GST rebate that the federal government did for purpose-built rental is really good policy. Unfortunately, and this played out in sort of on X, formerly known as Twitter, with our federal housing minister in Metro Vancouver. Metro Vancouver raised their DCCs in the same week as the announcement and absorbed the entirety of the benefit that the federal government passed on with that GST.
So gone.
And so that was quite a controversy that played out over the last several months. I think I will say that the CMHC RCFI program, which was called the Rental Construction Financing Initiative, which is now referred to as the ACLP program, that program really married. You go and get some benefit from the municipality, some extra density. They bring in financing for both your construction and your term debt, so 10-year money at a lower interest rate and high ratio financing. And in return for a number of non-market units or under-market units for a period of time, that is delivering. I will say that. I think that's been one of the most fantastic programs that's been put out by our federal government. And CMHC, it was killing it with that program. So I want to make sure that we do call that out as a success.
What else would you like to see governments do? Because we hear one announcement after another that they're going to really help move the market towards being able to make housing affordable. And yet everything that I see them doing almost does the opposite. What are a couple of initiatives that could make a difference?
I think a lot of it is the uncertainty, and I know that there's been a lot of talk, whether it's around the community, the CACs, or various costs, additional costs that are required of the developer, just having some certainty so that, at the time of either land purchase or when you're putting in for that rezoning application, you've got some measure of fixed costs that you can calculate into your pro forma. And I think right now there's so many moving variables that it really makes it difficult. And one change that's of any significance can really just, be the difference that makes the project viable to not viable.
So how can you go from saying, okay, I'm purchasing this piece of property. Now I'm going to go through the years-long process of getting it to being ready to submit for permitting. and then wait for that process to play itself out, how can you know what the pro forma is, especially if DCCs are changing, infrastructure costs are changing?
That's why a lot of projects have become unviable. That's why we have a list of 62 properties that are in receivership or court-ordered sale in Metro Vancouver, totaling a potential of about 10,000 units. And so, you asked, what would you like to see? I want to touch on what I would like to not see. And there's this consistent conversation around rent control. And there was an op-ed in the Financial Post, I think, this week. And, there was a meta study, it was published in the Journal of Housing Economics in June of 2023. 53 of 60, it looked at 53 of 60 published and unpublished studies. And so with a vast majority, or 53 of them, basically saying that the long-term impacts of this type of policy are completely negative. And I think that, every time I hear this conversation about rent caps, rent control, we have to do something about rents and all, and I think it ought to be a requirement, especially for a policymaker or a politician, that in the same sentence they talk about costs. Because we're doing ourselves and the public a disservice when we continuously talk about just the one side of the equation. And you're starting to see older buildings deteriorate. Quality of maintenance is deteriorating. You can't make investment in these buildings because we've been managing the rents on an annual basis. Because there's so little supply, there's very little turnover, and that's when we can move the rents up. And the whole time, the costs have been going up unchecked. And so our portfolio at Wesgroup, we've seen an 8.8% increase in revenue over the last 5 years and 70% increase in cost over the same time period, operating costs. And that's an unsustainable model.
And I would argue many of those costs are uncontrollable. So again, property taxes, insurance, various utilities, things that you can't say, oh, as an operator, you needed to do better. They're really outside of our control. I think most of us as professional operators have done a really good job of managing the projects, managing our properties, trying to, in some cases, centralize various, staffing for economies of scale. We're doing everything that we can to kind of keep things as manageable as possible, but then, you can't manage some of that.
Creative, innovative, find ways to make things work. Just got a minute left, and after listening to you at the moment, I go, so why do you still dabble in that market, in the rental market?
I think once you're in it, you're in it. and we've, there's been, it's a long-term strategy. It's a long-term strategy, and that's how we think.
Yeah, and I think it's satisfying to be able to look at what you've accomplished and that you're providing homes for people, and that that people have that confidence that they can go to bed every night and everything's taken care of.
Stable.
Absolutely.
Stability.
Well, I think that's a wonderful note to end on, because a lot of times people go, I don't know who the developer is and they're just out making money. No, you're in a business that you care about, and you're helping to provide the housing that people so desperately need.
Absolutely.
Thank you for doing that, and also thank you for coming in and giving us a glimpse into the complexity of the world in which you live.
Thanks.
Thank you.